Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Liberty Global Ltd. Annual Report. Liberty Global Ltd. provides a wide range of services to its customers across Europe. The company offers broadband internet services such as intelligent Wi-Fi, cloud-to-cloud open API integration, and various tiers of digital video programming. Its video services include Horizon 5, a cloud-based entertainment platform, Replay TV, a multimedia gateway service, and video on demand that provides access to movies and television series. In addition to its residential services, Liberty Global Ltd. also offers business services, including voice, advanced data, video, wireless, and mobile and fixed mobile convergent services. These services are provided on a wholesale basis to other operators as well. The company's mobile services include postpaid and prepaid options, while its telephony services include circuit switch telephony and personal call manager. Liberty Global Ltd.'s business services cater to small businesses, medium and large enterprises, and also provide various tiers of digital video programming and audio services. Its services are available in Belgium, Ireland, Slovakia, and internationally. The company's offerings also include Smart Security, which provides network security, safe browsing, and fraud prevention measures. Smart Home, which offers enhanced entertainment and home automation and security services, and Connect Box, an intelligent Wi-Fi and telephony gateway. Overall, Liberty Global Ltd.'s service portfolio is diverse and extensive, catering to both residential and business customers across Europe. Liberty Global Ltd., market capitalization of $4 billion, is materially smaller than most of its industry peers of roughly $7 billion. Liberty Global Ltd. trades at a lower price-to-book ratio of 0.41 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has aggressively reduced its share count by more than 5% while revenue has grown, but assets and equity have declined. This suggests management may be prioritizing buybacks over reinvestment, raising questions about long-term growth prospects. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, a notable increase in revenue from operations was observed, with £5.6 billion generated in 2025 compared to £4.8 billion in 2024. This represents a significant year-over-year growth of £800 million. Another factor contributing to revenue growth is the rise in related party transactions. Although the amount decreased from £1.05 billion in 2024 to £552 million in 2025, this reduction can be attributed to the company's strategic acquisition of Otwo Daisy on August 1, 2025. The acquisition of a 70% stake in Otwo Daisy likely led to a shift in revenue streams, resulting in the decrease in related party transactions. Overall, these factors indicate that the company has experienced substantial revenue growth, with no clear indication of any significant decline. The financial health of VMED Otwo can be assessed through its debt level and interest expenses. As of December 31, 2025, the company's total notes and credit facilities exceeded £11.4 billion, indicating a significant amount of debt obligations. This is further supported by the issuance of new debt instruments in January 2026, including vendor financing notes and term loans. The impact of this substantial debt on interest expenses is evident in the decrease of £60.7 million in 2025 compared to 2024. However, it is essential to note that the effective tax rate for 2025 was 23.6%, which may have influenced interest expenses. Despite these changes, there is no clear indication of a significant shift in debt level or interest expenses from one year to another. The company's financial instruments, including trade receivables and payables, also reveal a carrying value of £248.1 million assets and £528.3 million liabilities. While this information provides insight into the company's financial position, it does not necessarily indicate a significant change in debt level or interest expenses over time. In conclusion, VMED Otwo has a substantial amount of debt obligations, which may impact its financial health. However, there is no clear indication of a significant change in debt level or interest expenses from one year to another. Management statements suggest a cautious approach to the company's financial situation. The significant debt obligations and potential disputes with Ofcom pose risks that management is actively trying to mitigate. To address these concerns, the company has issued new debt instruments in January 2026. While there is no clear indication of the overall strategy or outlook, it appears that management is focused on managing debt and contingent liabilities. The change in revenue recognition policy under IFRS 15 has resulted in a significant increase in reported revenue for the year ended December 31, 2023. However, this development does not seem to be part of a broader strategic plan. Instead, it appears to be a one-time adjustment aimed at aligning with new accounting standards. Overall, management statements convey a sense of prudence and risk management, but do not provide clear insight into the company's long-term strategy or outlook. That concludes the financial summary for Liberty Global Ltd. Feel free to comment below, and I will be happy to answer them when possible.